Markets closing the week mostly lower, but the S&P is up more than 7% since April 11th. That's the date our next guest upgraded U.S. equities to attractive. Joining us now is David Lefkowitz from UBS Global Wealth Management. David, it's good to have you on. Good to check in here on this call. Now, markets bottomed like April 7th or 8th. That was that mini crash. We got a little bit of forbearance on the tariff side from the 90-day delay by the president. How are you viewing the market right now after we've recovered more than half of those total losses? And I guess now the stakes are maybe higher in terms of seeing some kind of trade talk progress.
Yeah, thanks, Michael. I think the backdrop is still fairly constructive. I mean, we got some very, very powerful and unusual contrarian buy signals in early April. We had a VIX that was, one of the highest readings we've seen in, some of the highest readings in its history. Investor sentiment was very, very cautious, and investor positioning was extremely depressed. And if you just run any numbers on when those things have happened in the past, U.S. stocks typically do quite well over the subsequent 12 months. So, obviously we've seen a little bit of a rebound here, as you pointed out. So I wouldn't get too hung up in the sort of day to day. Obviously, there's a lot of wood to chop with the trade negotiations. Everybody's expecting some slowdown in the data, that we're likely to see that. But I would stay focused on the big picture, is that those signals are still pretty valid, and we think stocks will ultimately kind of grind higher over the next 12 months or so.
Yeah, there's no doubt. I mean, all the breadth indicators and, people saying that you get one of these big reversals and sentiment getting really washed out definitely has good implications for 6 and 12 months ahead. But we are, 17% up off the intraday low from April 7th. I think a lot of those studies would suggest that's a pretty good few months worth of gains. And I guess bigger picture, I wonder conceptually what's going to get the S&P 500 back to challenging sort of the peak valuations, right? Don't you need a little more confidence to say that this market should be trading back toward 22 times earnings or something, which is where we fell from?
Yeah, I think a couple thoughts here, Michael. So when we've looked at when the volatility index, when the VIX has come down, and now it's back in, kind of the normal range, maybe higher end of the normal range, low 20s. When that has happened after a significant spike, usually that means we don't make new lows, right? So I think, we could be chopping around for a bit, but usually in the coming, few months, I don't think we're going to see more than a 5% or so sell-off in markets here. That would be entirely consistent with what we've seen historically. And look, I take your point on valuation. That is true. But we know that valuation is not a good predictor of near-term returns. It's much more powerful when we think about longer-term returns. And so I think what's going to be the more important driver is, when do we see the earnings momentum start to improve? And right now, I would say it's sort of coming down. Analysts are cutting estimates. As soon as analysts stop cutting estimates, then the market backdrop is, I think, in a more sustainable rally mode. And we'll probably get there later this year. But that's what I would be focusing on to think about the next leg higher.
And where within the market looks like it can maybe lead here? Sometimes when you do get a severe correction, you do get leadership shifts, or you get the market sort of shows its hand in terms of what comes back the fastest. So where would you emphasize?
Yeah, it's been really interesting, Michael. I mean, so, since April 2nd and since the market low, almost counterintuitively, what we've seen is sort of been the secular growth, the AI levered types of companies have been the market leaders off the bottom. They sort of got hit earlier in the year on concerns about the durability of some of these AI trends. And so I think that's giving us a bit of a signal. And, look, we certainly do like a lot of these secular growth companies in the coming years. We just think there's a huge opportunity within the AI ecosystem, and it's not just the technology companies. It's going to be all the infrastructure that's needed to support those companies. So, I mean, that's where we'd be focused. So that leads you to, sectors like tech, like comm services, like utilities, in terms of some of the power needs we're going to see there. So, I do think that, look, that's where we're probably going to get the earnings growth. And ultimately, that's, I think, what you want to focus on.